All right, so now we're going to take a look at the stochastics applied to a chart. And for this example, we're going to use the settings 14, 3, and 3 for the stochastic. So many different numbers that you can use. Like we've been talking about through the entire blueprint, there is no perfect number. What's going to matter is how you use whatever you've decided to apply to your chart. We're also using the numbers 70 and 30, and that's going to represent the oversold and overbought lines. Over here, this is our 70 line. This is our overbought line. Down here is our oversold line. That's the 30 number. So what are we looking for? Let's go in this little area here. You can see that overall, the downtrend has been in place for quite a while. But in every market, the market ebbs and flows. We're going to get impulse moves, corrective moves, until the whole situation changes. So this would be considered a corrective move in the context of an overall downtrend. Regardless of what's going on here, this hasn't happened yet when this has occurred. So you would look down here at your stochastic. This is showing you some momentum. Over here, this would be considered overbought. Down here would be considered oversold. There's quite a few methods out there that just say simply to buy and sell when the market's in either of those states. You don't really want to trade that blindly. Just by taking a look in this little area here, it's very congested in this area here. Looking down here at the stochastics, it's playing around with the overbought area. Is this an area that you want to trade in? You can look at these congestion type of moves in the stochastic as a means to keep you out of trading. When you want to trade, you want to see these big sweeping moves. These are when the great trades happen. When you start getting this choppy action, as you see in these little areas here, not conducive to great trading. So let's look at this one here, for example. Overall downtrend, context of the downtrend, okay? We're moving up here, right? So we're bullish. Would you be buying it through here? We're going to cover this in a couple of minutes, but we'll be looking here as an uptrend on lower time frames to look for buys. But let's just stick where we are right here. Price moved up. If you're just trading this time frame, you get up to here, the market is overbought. What do? Do you just blindly sell at these levels? Yes, it goes down, but what are you trading against? Well, simply here, you have some structure resistance here. Price is holding a support, busts through, comes back and tests, turns into resistance, moves to the downside. Same thing over here. What do we have in this area here? Price comes down, goes back up. In the context of an overall downtrend, look left. What we got here? Well, we're running smack dab in that congestion level. Price hooks down, price goes down. Another way you want to use this, and I just referenced it, was looking at it as a trend determination. For example, on this chart here, we got a cross right here, an obvious cross. And it's over here is where we get messy, but we don't know this is happening. But just for the sake of this video, let's just put our end line right here, even though we do get some more move to the upside, okay? So from this line on to this line on lower time frames, you would be looking for buying opportunities. Let's go down here. As you see, even though on the higher time frame it started to go up, it's still going down on this time frame here. But we're looking to do what? We're looking to go long. So where are we going to do that? Well, got to find context. Price goes down, go down, go down. Perhaps there is some trading setups in here for you. I don't know. Got some nice areas in through here. Perhaps that's a trading setup for you, depending on what your trading setups are. Take this off here. So that's looking for the uptrends. And as you can see, we start getting to some pretty sloppy price action in this area right here. Just by looking at the indicator itself, you can see that it's pretty sloppy as well. And just for an example, again, let's just look at our current state. We've had a hook down. That's pretty much in this candle here. While the market was overbought, whether there's something here for you to trade, it's entirely up to your trade plan. Perhaps you're taking this breakout on a lower time frame. Perhaps this red candle is not fully bullish. Perhaps there is a pullback inside of this candle that we don't see on this time frame. So you can use it for trend determination too, just following the momentum in the move in the market. But keep in mind that the overall trend is to the downside. So you want to really keep your expectations in check when you're trading that. Let's also take a look at what you've probably heard over and over again, divergence. I marked off a really clear-cut example right here. You can see that prices put in a high here, in a high, put in a low. Price is making higher highs. Stochastic is putting in a low, telling you the momentum is waning. Is this a trade setup for you? Well, again, it's going to depend on what your trade plan has for trade setups. If you just look at this little zoning through here, let's move this out of the way. You see that it's we've acted as resistance here. Price has pulled back. Took another run for it, put in this big momentum candle. But if you look down here, the stochastic, it's putting in a lower high than it did over here. This is a great reversal candle right here. Perhaps you stop the low of that, get a trade on the way down. And what do you do when price gets in through here? Well, perhaps when the market gets into the condition, if you've sold and the market gets in this condition, oversold, starts going sideways, perhaps you start locking your stop in, because you never know. This is where you might get that big moves against you. It didn't move too far here, but we did see earlier on over on the daily, on this part of the daily chart, there was a huge pullback, took out this high right here. So perhaps that is where you'll start locking in some of your profits and not looking to take any more shorts until this area works itself off. So that pretty much covers the stochastic. Again, for all of our indicators, we've really talked about making sure that you're using it in the context of an overall trade plan, and don't just trade them blindly. Have something to trade against, and don't look for the holy grail numbers. You're not going to find them. One way you could perhaps tweak the stochastics, for example, is just see if we can get all our highs, making these perfect little swings on the stochastic. Our lows, you can see how it's pretty much matching. We get into the overbought area, market sells off. Market overbought area, market sells off. Market gets into oversold, rallies up. You can start tweaking it that way to get in tune with the current market conditions. It's optimizing for the current conditions, and there's nothing wrong with doing that. A lot of traders will optimize for what they're facing in the market. There's nothing wrong with doing that. That's when you over optimize, using the past data to make the past data look phenomenal, that you don't really get a really strong view of how effective your indicator will be. One of the best ways to do if you're going to back test is here's if during my back test the market conditions have changed, tweak my indicator to more accurately reflect what's going on in the market. And then whether you do that or you don't do it, it's not going to really make or break anything, as long as you're trading setups, what you're trading against, your risk is all in line, and you're consistent in whatever you do, and you have found there's a bit of an edge in the trading system that you're using. And that can only be found during your back test and during your forward test before you ever put a dime of money on the line.